Hey everybody, I hope you're all having a wonderful day. Today we're going to be talking about student loans and their impact on your mortgage application. I got so much feedback on this topic already just from posting about it on my Instagram that I actually decided to re-record it and go a little bit more in depth for you guys. So the first thing you should know is, yes, you can absolutely get a mortgage with student loans. It's actually a lot easier to obtain a mortgage with student loans than people think. The reason for this is that most of the time they're looked at very similarly to other loans. So how do the lenders look at your student loans? If your student loans are already in repayment, usually that monthly payment, whatever it is that you're paying back, will be taken into account when it comes to your total debt service ratio. If your monthly payment is less than 1.5% of the total loan amount remaining, they may choose to use 1.5% to factor into the equation. So the lender will add that monthly student loan payment together with your potential mortgage payment, heating costs, your property taxes, stuff like that, in order to figure out that you can still afford all this stuff together with the income that you have. So let's take a quick look at an example so you can better understand how this works. So let's say you and your spouse or whoever you're going on the mortgage application with make $75,000 gross, so before taxes, a year. For this scenario, the potential mortgage payment per month is $1,800, coupled together with a monthly heating expense of $100, your monthly property taxes at $300, and one of you has a student loan that is $250 a month. This would all add up to a total debt service ratio, so debt to income, of 39%. As a general rule, we want to keep this number below 42%. However, Canada Guarantee and Genworth actually take that calculation all the way up to 44% currently. If you exceed this TDS, then you will not qualify for a mortgage with an A lender. There are some B lenders and private lenders that will definitely take a look if you are exceeding this. It just depends by how much. Another question you may have is, well, what if my student loans aren't in repayment yet? In this scenario, the lender is likely to take 1.5% of that total outstanding debt and use it in your total debt service ratio. The reason for this is, of course, because you will be repaying that at some point, and so they want to take that into account when you're doing an application. Now, I had a few people ask me, how debt kind of measures up to how much of a mortgage you qualify for. For every $400 in low payment per month that you have, that takes away about $100,000 in mortgage qualification. And for credit card debt, about $12,000 in total outstanding debt will equal the same thing, about $100,000 in lost mortgage qualification. And the reason for this is they're a little bit more stringent on credit card debt. The last point I really wanted to drive home about student loans is you have to remember that student loans can have a huge impact on your credit score. You have to ensure that you're not missing any of those student loan payments. They haven't gone to collections or anything like that, and you're actively showing that you either are going to be repaying them soon or you are already in repayment. The last thing you want is for student loans to impact your credit because, as you know, if you've watched previous videos of mine, credit is one of the most important parts of your application. With that being said, guys, I'm going to end this video here. Thank you so much for watching. Please share this video. I know that even if you don't personally have student loans, you 100% know somebody who does, and they might find this really interesting and get some value out of it. So thank you for watching. Once again, it's Devon Melanson here, mortgage agent, and I hope you all have yourself a wonderful rest of the week. Reach out to me with any questions, and I'd be happy to help you. Thanks.